We've got a number of big breakouts underway in Japanese markets today. We're finished now with the G7 summit. The Japanese government had been holding back on a lot of things ahead of this summit. They were the hosts, and they didn't want the whole thing devolving into an argument over currencies and stimulus and things like that. So they'd been backing away from a number of measures that they had been considering. Over the weekend, and pretty much almost right after the summit ended, it came out that Prime Minister Abe is considering delaying the Japanese sales tax hike that had been planned for April of 2017 to the fall of 2019, or about a 2.5 year delay because there was a feeling that could slow the economy's progress. There's also been a lot of talk that maybe the Bank of Japan could come back with more stimulus this summer, but what's significant coming out of this then? We've seen the yen starting to weaken, and then we're seeing that translate into a rally for Japanese stocks. The other thing we're getting is that with Japan talking stimulus and with the US talking about raising interest rates, we're seeing the monetary policy starting to diverge again between the US and Japan, and then seeing a significant increase in relative value of the US dollar relative to the Japanese yen. So as I noted, with the yen starting to weaken, that makes Japanese exports more attractive. The Nikkei 225 is quite dependent on a lot of companies that are heavy exporters, so a weaker yen really helps them. So we're seeing the Japan 225 rally as well. So I'll just show the charts here. To start off with, here's the dollar yen. Look at this. This had been in a downtrend since December, and a very, very steady downtrend, and then we had it tumbled in late April. Look at this, got oversold, lower low at the beginning of May, higher low in the RSI. That's a positive divergence. Since then, we've seen it recovering. The RSI has gone back above 50, signaling an upturn in momentum. Now we've got a breakout in dollar yen over the 110 round number, over the 50-day moving average, over 110.50. This Fibonacci level here looks like it's starting to climb up out of a downtrend. First resistance 112 even. The next resistance is this Fibonacci level up here around 113.45, and farther off, it's still way off the 200-day moving average, which is up near 116.65. So this has a lot of room to rally, particularly if the US stays hawkish and the Bank of Japan goes dovish. We'll also show this on the index, the Japan 225, which tracks the Nikkei. We're just waiting for this to come up, and we'll show it once again. This is starting to break out as well to start off the new week. We'd seen it slowly recovering here, a bit higher low in April than February, a bit higher low in May. Look at this. So we've seen it creeping higher. In fact, we've got a nice little ascending triangle here that had been below 16,815. When it broke through this Fibonacci 16,815, holding above it, just intraday spikes weren't holding down, but weren't getting very far. We were bumping up against 17,000. Now we've cleared that. Next resistance levels for this: 17,145, 17,430, 200-day moving average up here around 17,640. RSI back above 50, also signaling that momentum is starting to work its way upwards. So we are looking as though we're headed into some new emerging bull trends for Japanese markets as we shift from May into June.